I understand that part of your proceeds will be reinvested into new opportunities, with secondaries being, a particular focus, really to, I guess, position yourself for the next VC cycle. Can you tell us more about that?
Yeah, I see the market really has sort of a tension that exists at the moment, as we see the public markets have been struggling for liquidity and share prices have therefore been trading below asset values. There's a tension naturally, therefore, to support the share price. That's what we're here for, to provide returns to our shareholders, but also to build fundamental value into the business. And we're in the unique position where we're supporting innovation and productivity that the public market shareholders can't really get access to unless they own shares through Molten Ventures. And our ability, therefore, to drive future vintages. Venture capital is a long-term asset class, and so investing into new technologies and being consistent about that creation of new investments and supporting those technology shifts as they come, that creates the value that will be accruing in 3-4+ years time. And so we're very keen on making sure that we stay in the market, we stay active, particularly now where I think we're in the midst of a generational technology shift. This is a very unique opportunity, even if you look over a 50 to 100-year timescale. I think we're in the midst of a value creation shift that I don't want our shareholders to miss out on. And so to make sure we continue to invest is important. But as you described there, secondaries in a market where there's a pricing arbitrage is a great way to create value. And we've have a strong track record of investing in assets and also funds where there are clear leading companies in those portfolios. I'm thinking around the transactions we've done with Seedcamp and with Early Bird, and then in the last year with Connect Ventures as well. And that's given us an exposure to TransferWise, to UiPath, to most recently Typeform and Soldo, and also to Revolut. And that just adds additional value to our shareholders. And the beauty of secondaries is that you can price known assets and known winners. And because of the liquidity arbitrage, you could often price them at a discount to their true value. And then you get the benefit of, because they're more mature, being able to recycle those companies into cash in a shorter time frame than you would do with just pure primary investing. And so I think with Molten, you have that unique capability of having that blend of primary and secondary investing opportunities to create value, and that is distinct. If you look at our capital allocation policy, we point to those opportunities, but we also point to the need to support the share price. And so we're saying 10% of our realizations will go into buybacks, and we put that program in place in the summer. And as we get more liquidity coming through from subsequent sales, we'll continue to follow that policy.